Hello and welcome to another episode of the German Technologist podcast. I'm Karen Etkin and I'm here today with Tracy Chadwell, founding partner of 1843 Capital. Tracy, thank you for being here.
Karen, thank you so much for inviting me. I really appreciate it.
Can you tell us a little bit about 1843 Capital? Maybe start by why you chose to name it that way?
Yes. 1843 serves two purposes. The first and foremost is that it's the year that Ada Lovelace wrote the first computer program. She had written it based on what she'd seen was a punch card system that was being used by Charles Jacquard to program the weaving of his tapestries on looms. And she thought it could be a perfect application to program what Charles Babbage had invented, a counting machine. And so she put the two together and is credited with writing the first computer program. So it's a nod to the fact that women have been in technology for a really long time. But the second purpose it serves is that we go to the top of just about every venture capitalist being a number, which is great for us.
That's a very cool story. And all the other partners in the fund are women, right?
Yes. So my fund partner is Allison Andrews Reyes, and she is an engineer by training. And she was a successful founder of a cybersecurity company that she scaled and built and successfully sold to Deloitte. And my background is that I'm a lawyer by training. I don't practice much anymore, but it sure comes in handy when looking at the deal documents. And I was with an investment bank on the West Coast called Robertson Stevens. I was a partner of a billion-dollar growth capital venture capital fund prior to starting my own fund, which I started with Allison about 2 years ago.
I think it's also worth mentioning that you speak conversational Japanese and restaurant French.
Hi. Hi, Skoshi wa karimasu. I do. I speak a little Japanese because out of law school, went to go work for a Japanese law firm by the name of Nagashima and Ono. And the French is just because je parle un peu français. I adore French food. I adore French people. So I learned a little bit of French as well.
That sounds extremely handy. So, when did you start the fund and what made you start it?
So we started the fund a couple of years ago, and the reason was I had found an incredibly interesting opportunity. When we're looking for above market returns in this business, just about the only place to do it is when you find an inefficient market. And I had found an inefficient market investing off my own balance sheet in women founders. And they were only getting 2% of venture capital dollars at the time. They still are not really getting much more. But it was a way for me, naturally as a woman, to access some really terrific deal flow and very competent CEOs. We no longer are fully exclusive to women founders with the fund. We're open to everyone, and we've decided to pursue another inefficient market, which is what we call inevitabilities. My partner has an esoteric background in cybersecurity, so she's able to access deals that are not necessarily accessible to the general investing population. And then for me, I discovered what is the largest market opportunity there is, which is investing in the aging population. So we decided to call that space silver tech because I like the name silver tech better than sort of age tech or elder tech, because I think the name silver tech gives it the respect that it deserves. I think this is an incredibly vibrant place. We're still talking about people who have a lot to give, and we are talking about really interesting technology that is helping people live their best lives in what AARP calls, health, wealth, and self. And so I just prefer using the name silver tech.
Can we talk a little bit about the fund's investment thesis? What types of companies are you looking for, and what are you looking into when you are doing due diligence on a company?
Well, I'm looking primarily in the silver tech space, and we call our entry point Series A, which to us means when a company has recurring revenue, about annual recurring revenue of about $2 million per year. And what this does is this allows us to participate at a time when we can actually access some metrics around the company. We can look at what their customer acquisition costs are. We can look at what those are relative to their lifetime total value of their customers. We can look at what something which is incredibly important, which is pricing. And also to the type of customer, because very oftentimes seed stage companies take a tremendous amount of time figuring out exactly who their customer is. And when we enter in at the Series A space, by that time, companies have pretty much figured out who they're selling to. And our capital is just then used to go access more of those existing customers. But it's also a time when there's still a little bit of story. People are still being added to the team. This is certainly not a full team. You're usually talking about between 10 and 25 people at this point. So you're adding people. You're expanding to what you think that the company culture is looking like. And that is something that I find incredibly exciting. It also allows us to get in at a price point when we've sort of de-risked, but we feel like there's a tremendous amount of upside. Everybody hears about the great IPOs and the really big sales to strategic buyers. But in all honesty, 78% of venture capital backed company exits are through M&A. And that is both to financial buyers, which are private equity funds, and then also strategic buyers, which could be other companies. And those are not happening all the time in the 800 or $1 billion range. Those are generally happening in the range of somewhere between 60 and $100 million. So we like to stay in value under that space so we can maximize our exit opportunity.
Do you feel like your background in private equity is useful when examining deals?
Yes, having a general background in all financial services has been incredibly important in that space because understanding how to position a company for sale is critical. It's quite easy if you have capital to write a check and to get in a company. It's incredibly difficult to get out.
Speaking of checks, what size checks are you usually able to write for companies?
So we reserve half of our fund for follow-on investments, and our initial check sizes are anywhere between 500,000 and $1 million US.
So we know that the silver tech or age tech market is extremely diverse because the aging population is extremely diverse. Are there any specific verticals within this market that you are particularly excited about and think that there are good opportunities in?
Yes. Maybe it'd be useful if we talk about some paths I went down that weren't helpful to me. And one of them, it seems to be the hardware and the connected devices to detect falls. It seems like that is a space where, first of all, your cost of development and your cost of inventory and then the sales process, it's just very complicated. And I haven't been able to find anything in that space where someone has gotten incredible amount of traction. But we did participate in a company called IOTIS, which then aggregates all of these Internet of Things sensors and does data analytics on them for both multifamily residential managers and assisted living facilities. So that one has been an incredible win for us. Her growth has been great. But then also spaces that I still find incredibly interesting, not so much caregiver matching. I mean, we all know that there's a huge caregiver shortage in this country, but I'm very interested in education for caregivers and trying to transform people from what their existing careers are into effective caregivers, but then also retention of those caregivers and making sure that they're happy in their jobs, because the turnover in that space is a tough thing that we have to mount as well.
Yes, caregiver turnover is definitely a huge challenge. I'm not sure how we can solve that with technology, but I really hope that it doesn't get any worse than it already is.
Oh, absolutely.
So, there is one company in your portfolio that I've been following for quite some time and even included them on my annual review of the HTech market. It's called Silver Nest. Can we talk a little bit about what made you invest specifically in them? Because I'm sure you get a lot of decks sent your way.
Yes. We actually see 600 deals a year,
Wow.
which is incredible. So trying to sort through all of those is a big process. But something I like to say is that you can't find a needle in a haystack unless you look through the haystack. So it's incredibly important for us to at least give a look through of everything that comes to us. But I have to tell you also too, we are thesis driven. So a lot of the deals that we end up doing are spaces where we've built a thesis around it, and then we've gone out and found the best companies in that space. Wendy Burkhart, Silvernest. This was a deal that I did on my own balance sheet. Wendy is terrific. When I met her, I thought she was just an incredible CEO. And honestly, getting involved in Silvernest was the way that I discovered what an exciting market opportunity this is. So Silvernest is a company that matches people who have existing assets, which could be a home or an apartment. And in order to help them to monetize that, they're matched with a roommate. This helps them from a financial perspective because we have a lot of people that are over 50 or 60 that have financial insecurity. But then also too, the thing that I really like about it is that it solves the loneliness problem because who wouldn't, if they had a 78-year-old dad, want their dad to have someone living in the house kind of keeping an eye on them, not necessarily as a caregiver, but just, hey, making sure that the stove's not left on or that there's healthy food in the refrigerator. So it's a great thing from all sides, and I'm incredibly proud to be an investor in the company.
Well, you should be proud. It's a really good company.
Yeah.
You mentioned that you have a thesis in the fund and then you go out and find companies that sort of fit that thesis.
Yes.
Can you elaborate on that point?
Sure. Well, in terms of the aging population itself, we did a lot of research on it, and just the fact that 10,000 people are turning 65 every day. And we're really looking at a silver tsunami happening here. And we have a lack of almost everything that has to do with what happens when you age. And I just feel like that there's still tremendous, tremendous opportunity for technology to solve a lot of the problems in this space and to also assist with just positive, living your best life companies as well. And so the first area that we built a thesis around was the slip and fall, which, as you know, is incredibly expensive, both personally, but then also too for senior living facilities and assisted care facilities. And that's how we ended up with the IOTIS investment. The second space, I like to go talk to the customer, so I always love to go to sit down and talk with CEOs and CTOs that are in senior living facilities. And time again, it kept coming up that one of the biggest issues is transportation. So we said, you know what, we should build a thesis around transportation and what is the best way to tackle this. And so we ended up making two investments in the space. The first one was Hop Skip Drive. The CEO is Joanna McFarland. She's out of Los Angeles. And I had looked at senior drive companies that were standalone, just doing it for seniors. And one of the difficulties with it is, as you might imagine, is customer acquisition. So we are seeing a tremendous uptick in terms of people over 50 and 60 having, mobile devices, handheld telephones, smartphones, but they also have desktops. But getting comfortable calling an Uber or a Lyft, it's getting there, but not quite there yet. And so a lot of these companies are setting up phone services, and they're basically just phone concierges to connect with Uber and Lyft. Some of them are a little more advanced than that. But we really liked what Joanna was doing because she was actually getting enterprise level contracts with cities to drive children. So while she had this baseline of these enterprise contracts, then she was able to allow her growth on the direct to consumer side for both children and for the aging. Because when you connect with the kids, you're connecting with most likely it's the mom or some, is the dad as well, who is then calling it or online connecting for the child. So then they're online connecting for their aging parent as well, who may need to get to the doctor with some extra assistance. And Joanna has a terrific business because 90% of her drivers are women, first of all. But then also, too, she does a great job in terms of the background checks, in terms of the continuous monitoring, in terms of training her drivers. So she really had a terrific business, and we decided it was a great place to invest. The second one, so Joanna's solving the problem within sort of the suburbs and independent driving. We also came across a company called May Mobility, which is out of Ann Arbor, Michigan. And Ed Olson and Allison Malek there are developing a driverless shuttle. And it's live in 4 cities at this point, which is really incredible. But we have more and more people wanting to stay in the cities as they age, and I'm sure, as you well know, more and more cities are trying to become centers for aging. And by having the transportation opportunities like a driverless shuttle, they're able to do that. So there was an exciting space to play. The one place where we're struggling that I also heard was a huge issue is the amount of so what you call it, promiscuity that's happening within senior living facilities and assisted living. And we're looking at different tech solutions around that, but that's a tougher one to solve than transportation, for sure.
Yeah, that's definitely a tough issue. And I like comparing the age tech market to the kids tech market, because in both markets, the person using the product is not necessarily the person who is buying it and paying for it.
Sure.
And that just adds another layer of complexity. And especially for small companies, it can be challenging to meet the needs of more than one stakeholder.
Yep.
So what are the gaps that you currently see in this market? If you're an entrepreneur who wants to get into silver tech or age tech, what would you go after? What opportunities are interesting in your opinion right now?
Sure. Well, trying to find ways to increase connectivity is one way, and I think we're seeing people develop things that are television screens. And, obviously we know that Amazon with Alexa and Google with Google Home are trying very hard in that space to increase connectivity with people. I think, gosh, one of the worst ones is elder fraud. And I'd love to see more companies in this space that are trying to help with that. That most of elder fraud is committed by families. And then some of it is caregivers. Yeah, it's really it's not nearly as much as we all hear the stories of the person calling on the phone saying you won $1 million. All you have to do is give us your credit card, and that does happen as well. But generally speaking, it's more family members that are sort of raiding bank accounts and things like that. And I would love to see more solutions in that space. Part of the difficulty, though, is elder fraud and also planning for retirement. These are things that are incredibly necessary, and there's definitely starting to be some technology solutions around this. One of the things, though, I've seen is that it's sort of like spinach. It's something really good for us, but it's not something that most people want to think about or do anything about. So trying to get them to take their spinach to use some of these tech solutions that are in place is incredibly difficult. So if someone could crack that, where they would make it really fun and accessible and easy for people to do, I think that's a huge opportunity.
Yeah, for sure. And we do see Amazon and Google and Apple and even Best Buy in recent years going after this market, not only with acquisitions, but also with funding. I know that the Alexa Fund has given funding to several age tech startups. So where do you see this market in 5 to 10 years, or where would you like to see it in 5 to 10 years?
Oh my goodness, I would love to see an increase in mental fitness, an increase in physical fitness, and an increase in financial fitness. And I think that there's still room for a lot of technology companies to help in all of these areas. And, I think we're going to see some incredible things. I looked at a company the other day that is called Seismic, which is really incredible, which uses robotics, to help people stand up, which is exciting, and help people stand and to participate in life. Because I think that, so much of our physical body is connected to our mental wellness, and to be able to go out and to participate and to be with friends, I think is very important. And so to the extent that we have tools that can help us do that, I just think we're going to be a much better world.
Yeah, you really hit the nail on the head with that last remark. Mobility is a huge factor in people's ability to maintain social interactions.
Yes, absolutely.
So, if I'm an entrepreneur and I walk into your office and you can give me one piece of advice, what
Yes.
advice would you give me?
Well, I think the first thing is to find a really interesting large market opportunity. Whether or not you're going after venture capital funding, venture capital funding is such a small, discrete part of the funding universe, and you can build a fabulous company without taking any venture capital funding, and many people do. Sometimes people build huge companies just based on one small round of funding. So the large market opportunity, one of the reasons we like that is the way that our math works. First of all, if you have a large market opportunity, you are more likely to hit your targets because you just need a small portion of that market opportunity. But also, too, we need to see you be able to scale to, typically decks will end up showing that they're getting to 100 million in sales in 5 years, which is kind of crazy, but that seems to be sort of the Silicon Valley norm. But we do need to be able to see you accelerate to at least sort of 20, 25, 30 million, because that's when you become saleable. That's when we can see the ability to exit your company, which, unfortunately, that's not necessarily aligned with what the entrepreneur wants, but that is our business because we are fiduciaries and have to return the capital to people. So first and foremost, choose a large market opportunity and solve a real need. My partner Allison and I talk about inevitabilities. It's something that has to happen, because if it's a nice to have, it's just a much tougher sell, especially if we start to move into a down economy. And the last bit of advice I would offer is to and we look for this when I'm looking for an entrepreneur, is someone who is well networked and has a basis in the opportunity that they're trying to solve. So if you're a microbiologist and you decide that you want to solve the transportation problem, that is a tougher one for me. If you're Ed Olson and you're coming out of the University of Michigan's robotics and autonomous driving department, that's a solid fit. So those are the basics. But then also find some place that you're following your heart, because being an entrepreneur is a tough job. I was an entrepreneur starting my firm, and I always say that we as entrepreneurs have the luxury of working any 16 hours a day that we please. You have to really be passionate about it and love it to sort of get through the inevitable downturns, but then also too the long hours and the stress. So.
That is great advice, Tracy.
Oh, thanks.
Anything else you would like to add?
Um, just enjoy each day. Everybody should just enjoy each day and live in a place of gratitude. And I find that when you start with gratitude and kindness and courage, that seems to be a winning combination. So.
Wonderful. And on that note, thank you so much, Tracy, for being here with me today. I really appreciate this conversation and you taking the time to talk to me.
Oh, thank you. I really enjoyed it.
And that's all we have for today. For more HTech content, visit thegerontechnologist.com, where you can also subscribe for updates. Bye!